The Morgan Report with David Morgan.
David Morgan with you with themorganreport.com for the week ending 6 February 2021. Well, I'm going to take a little diversion from the usual weekly perspective and just talk about silver, which probably shouldn't be a surprise. I'm really not going to say much because if you come to the front page, you should get on our free list, especially if we're banned from YouTube, which we've been shadow banned for years, and I can prove it, but won't bother you with that. And, come to the blog. That's where the meat of the site is. I've done so many interviews this week. I've been hitting I usually hit about 3 a week average, and I've been hitting 3 a day. So that's where you're going to get the most up-to-date information. Just come here on the blog, starting back with Jay Martin before the silver squeeze, and I did this one here, and then David and I did one that didn't get recorded, so we might do another one. Did one for the load pay, and I have money in that program, so I'm somewhat biased there. Talk about the short squeeze, talk to Charlotte McLeod of INN, and there's some more coming. So really, rather than just repeat all that stuff, plus I'm pretty burnt out, let me just say a few things. One is, I know there's silver investors that are pretty disappointed with the price action, especially after going from Sunday night into Monday, where we thought there'd be a gap up, and there was, and silver hit about $30, and then basically the rest of the week, silver's been uneventful price-wise, but not participation-wise. There's been a lot of silver physically that's been taken into the market from retail and wholesale, meaning commercial bars. Commercial bar market must be tight. And the reason I say that with authority is that I've never been in a position to know I have, but to see commercial bars marked up $1 an ounce over spot. They usually sell at spot, plus there's a little fee to take them off the exchange and transportation. But you're talking 5 cents over spot or 2 cents, that type of thing, not $1. The spreads are widening across the board, especially in retail, and that's really unfortunate for the retail investor because you want to buy pretty close to what the melt value is or what you get paid for on the sell side. But there's so much demand that the spread is widened, and again, widening in the wholesale market as well. This whole thing has not come to fruition yet, in my studied view. There's a lot more to this story that we're not seeing quite yet. Well, let me say I think I'm seeing it. I'm pretty clear that I'm seeing it, but it hasn't manifested to the level that I think it will. But just because I think it will, and I've spent most of my life looking at the silver market, doesn't make it a truism yet. So, in almost all these interviews, I made the point that going short squeeze on silver is a lot different than going a short squeeze on a tightly held GameStop type of company. There's so many ways to participate in silver with so many different derivatives that are seen and unseen. And what do I mean by unseen? And that's the over-the-counter derivative market that you don't have data for. It'd be something like a merchant bank that would be creating options on their own. It's legal, it's a contract, 2 parties agree and all that. It's just that you just don't know how much, silver's been sold forward, into what dates, how much, all that kind of stuff. And that market's pretty darn robust. So, and I have not been able to get a hold of somebody I trust in London to get their take on it. So I'll leave it pretty much there. I'll just tell you a quick story about London. A CPM Group and the Silver Institute both put out a silver study every year. I've bought them for years. Before that, Handy and Hardman did it. I bought that one for years. And in the earlier CPM data, they would show how much silver is being held in Europe. And in those days, believe it or not, it was a very small amount, like 10 or 20 million ounces at that time. And one of my whales, I'll call it, called it, was very upset with me because they'd just been through the London warehouse and there was like 100 million ounces there. And so I took it in stride, didn't put them on hold, so I get back to them. I'll circle back. And I got a hold of Jeff Christian and said, hey, Jeff, help me out here. I'm using your data. And he said, oh, David, he goes, that's Warren Buffett's silver that's in London. I said, okay. So just because you see this big stockpile, and I've said this before, but I want to repeat it because a lot of people don't get it. Just because you see a large stockpile and it's in London doesn't prove ownership. So the point I make, and I say it succinctly, is location doesn't prove ownership. You can have, 350 million ounces in the COMEX warehouses, but that doesn't prove ownership. That doesn't prove that JP Morgan owns it all. In fact, they break it out in the tables, and I do that on this once in a while. I just did it for our private members. It's public data. Anyone can get it. And showed, what banks own how much and how much is being held for long-term investors and how much is what I would call the free float available for people to take or, users like Mitsubishi, 3M, Dow Chemical, you name it, or an ETF, an ETP, a fund, an individual, whatever. So I don't really need to say much more. I think, I've talked about, we have this silver watch list now, which you can click on and it goes through every day. I did pay something to do this, but sort of a public service. Some of these companies are in the Morgan Report, some are not, but nonetheless, you can see them right there. So I'll stop this now. And as I've said before, this nav bar way at the top here where it says latest news, that's our path to our YouTube channel, to our Twitter feed, to LinkedIn, Facebook, and that's a site map. So that if you want to get to it, I'm pretty active on Twitter, and the Twitter handle is at SilverGuru22, and you can see a lot of stuff that I put up here. So it's up to you. Anyway, that's it. I'll be back with you next week, and I do think the silver market is quite tight. I'm not sure. I doubt the price right now is reflective of how much buying pressure there really is in the market. I want to see another week or two worth of trading and see what happens. I think the market is just getting exciting, and I think there is pretty much a squeeze going on. How strong it is, how convicted the people are, who's going to stand for delivery, who's long-term, and who's just looking to speculate, all remains to be determined. But if the majority are investors and buy and hold, buy more, we're going to have, I think, a very interesting silver market. And lastly, I guess I'll just say for everybody that's not a paid member that I did forecast probability of $40 silver in 2021, well before this Wall Street Bets situation. So just looking for another good year, looking for it to beat gold on a percentage basis. I didn't give a target for the gold-silver ratio, but went from, 125 down to like the low 70s, and I think we got into the 60s on Monday temporarily. I would say that ratio should probably get into the low 60s, maybe high 50s by the end of this year, but time will tell. I'll leave it there. I'll be back with you next week. This is David Morgan from themorganreport.com.